Good morning, Jags. This is Fahad. Today is Tuesday, January 12th. Let's get started. It's time to get long Salesforce, symbol CRM. Now, I have avoided this stock for several months because the company did an acquisition, a fairly large acquisition of Slack, symbol WORK, as you all know. And as a result, this stock has corrected materially since then because of the arbitrage pressure. Remember, this was the day when they announced this was around in the first week of December, and the stock was trading near $260 per share. And since then, Salesforce has corrected all the way down to 218. But I believe right here, this is presenting a pretty interesting risk reward scenario to get long for a potential rally back up to $240 to $250 per share. You can see there's an air pocket in this stock that's open all the way up to about $247 to be precise. So the stock is at 218 right now. So that's about 10% to the upside, a tactical trade that I believe is coming pretty soon in front of us. Think of Salesforce the same way as when I turned bullish on NVIDIA 2 weeks ago. Now, generally speaking, I reserve these kind of ideas for webinar and chat room, particularly for webinar, because for all the Jaguar active trader community that we have. But today we are not going to have a webinar because I have an engagement with a doctor's appointment that I have to go to. So for that reason, I'm bringing Salesforce to this conversation this morning. Anyways, going back to the NVIDIA was a similar exact kind of a case where this stock had been consolidating for 4 or 5 months. Nobody was really paying attention to it. And down here, when this around $505, $506 per share, when this was starting to form a bullish falling wedge, that's when we recommended buying call options in NVIDIA. This was just 2 weeks ago in webinar, and the stock blasted higher, and many clients have made pretty healthy amount of money in the past 2 weeks in NVIDIA here. I believe we have the similar kind of a setup now in Salesforce. Another way of taking a look at it is this technical picture. This is what the bullish falling wedge looks like. You can see that the momentum to the downside is starting to stall. The volume has dried up. MACD is no longer crashing. MACD has basically stalled and flatlined and potentially showing early signs of bullish divergences. RSI is no longer continuing to crash. RSI is actually making slightly higher highs and higher lows as well. So I expect this to pop and make a run towards this $240 to $250 per share. Now, with all of this said, there's a couple things that you need to know why I'm turning bullish on Salesforce and looking for that 10% rally. This company does a very good job each month presenting some insights as to how the business is doing. And this morning at 8 o'clock this morning, about a half hour ago, they posted this 2020 retail insights, their collective thoughts that they saw in the fourth quarter 2020 holiday shopping season. And the tidbits that are presented here are actually quite bullish. So I'm going to give you a high level view over here. There's a lot of charts over here that you can dive in on the company's websites itself. But the most important thing is that Salesforce data shows a 50% increase in digital spend over the 2019 shopping season, making it one of the biggest digital holiday shopping seasons to date. Consumers spent $1.1 trillion online worldwide and $236 billion in the United States alone, compared to $723 billion worldwide prior year and $165 billion in the US in 2019. If you compare this kind of growth rate to prior years, naturally, this is all because of COVID, but this is the highest, the strongest season that we have seen in the US and worldwide for a long time. And further breaking this down, the company mentioned in this press release this morning that the retail offering, for example, surged dramatically into various formats. So for example, we saw the digital commerce surge later in the year from all retailers, not just the ones that we know about, such as Amazon. And so also, retailers offering curbside and other pickup options grew almost twice as fast as those that did not. Um, the company also mentioned that the consumers embraced financing options, with consumers looking to pay for big ticket holiday gifts in installments. Buy now, pay later usage saw a year over year increase of 109%, with the biggest increase in taking place in the week before Christmas. They also mentioned that the sporting goods and home goods were the hottest product categories. Revenues for sporting goods grew by 108% compared to the prior year, while home goods grew by 89% year over year. Even the beverage and the food industry saw a strong sales growth digitally of 80%. Active apparel were up 35%, and footwear was up 39%, and general apparel was up 40%. Now, to tie all of this very strong holiday retail season, how did Salesforce actually benefit from it? Because this is the cloud leader, right? So it falls right in the middle of all of this. Well, the company is providing some tidbits about that too. So for the fourth quarter 2020, the company is mentioning that their Commerce Cloud digital sales powered by Commerce Cloud grew by 76% year over year in the fourth quarter. Their marketing cloud communication made surge in the holiday season, with 7.2 billion push notifications on mobiles, 3.7 billion SMS messages, and 129 billion total emails sent as marketers engage consistently throughout the season. Another, their artificial intelligence AI platform called Einstein also played a key role in how consumers shop during the holiday season. Einstein's accounted for 11% of total digital orders in the entire country, growing by 25% year over year. And the Service Cloud agent, saw cases of more than 14.5 billion times and received 946 million customer service calls during the holiday season through the Service Cloud. These are all very, very positive for this company. Now, with all of this said, I wanted to further check whether just the company's word is good enough as to what they're telling us about how strong this quarter was. I went back to see if we have any channel checks, and turns out we do. Here's what we found out. Bank of America did a big partner survey, and I'm going to show a series of comments over here that came from some of the biggest partners that use Salesforce Cloud and Marketing Cloud and the AI assistant called Einstein and all of those. So here's first one, which is the global SI partner that Salesforce has. These channel checks show, this one shows, I quote, "We are hiring the most consultants in our Salesforce practice, followed by Workday and ServiceNow. Service Cloud engagements are really strong right now for firms running field services and call centers to manage disrupted support organizations." Here's the next one. This is another big giant SI partner who said, "Our vertical focused Salesforce business will most likely be down for the year, given low activity in Q2. Our Q3 was average compared to other years, but activity in Q4 is looking great. We had a lot of new deals come in for Q4, with an increase in government work and in the healthcare vertical." There you go. It's talking about improving sequential trend from Q2 to Q3 to Q4. Here's another one. This one is also a big giant global SI partner that's talking about, I quote, "Our Salesforce business is on target to exceed our expectations for the year, with outperformance in the healthcare and public sector. We are seeing more adoption to Service Cloud as organizations realize it is more cost efficient to retain existing customers instead of acquiring new customers in this environment." Here's another one. This is another big giant SI partners in North America. "Our Salesforce business has been very strong in the last quarter, and business has been exceeding expectations. We are expecting this heightened adoption to continue for the next 12 to 18 months as businesses continue their digital transformation journeys and adapt to working remotely." And the last one is another one. "We have been," and this has to do about the Tableau, which is a business that the company acquired, Salesforce acquired several years ago. "We have seen our Tableau business accelerate since the acquisition. Our pipelines have increased significantly, with using Tableau for sales and marketing analytics use cases as the main catalyst for adoption. 90% of the time, Salesforce customers are using Tableau for customer 360 scenarios. Overall, we're seeing great growth in a Tableau business, which is growing more than 50% year over year. So both the channel checks are coming out very, very strong, as well as the chart is setting up with the if bullish falling wedge. And lastly, and also the commentary directly from the company is also coming out very, very strong. The last thing I will mention is that you're also seeing increased amount of call option activity. This is a picture from Jaguars scan of Salesforce, and you can see that really beginning from Thanksgiving, just after Thanksgiving, we have started to see far more call accumulation than put accumulation. In fact, in the past week or so, we have barely seen any kind of put accumulation. It's nonstop heavy call accumulation with 82% bias. For those who are familiar with Jaguar Scan, you can click on any of these bars like this one, and you can drill down. If you see these big, large amounts like $1.2 million bullish bet at the 240 strike calls expiring in October 2021, you can right click on this, you can drill through and click and look at the lot sizes, and it will give you to the finest details. So for example, on December 18th, somebody bought more than $1.2 million worth of these October 2021 240 strike calls that remains in open interest. So all of that is coming together very nicely. I'm looking for a 10% pop or more in this stock in the next coming weeks and months. That's it from me, Jay. Right, I'm not sure if Jay is going to be joining us today. Jay, are you there? All right, probably not. Let's go to Chronicle.
Morning. First off, for our subscribers, today is going to be an important day of sorts for a number of companies because if we look at the first read, Needham is currently holding their virtual growth conference and their analysts are going to be meeting with several companies you may have positions in. Those companies include Ciena, CIEN, Tyler Technologies, TYL, Upwork, UPWK, and Sprout Social, SPT, which was a top pick last quarter. And then meanwhile, JP Morgan's analysts are going to be meeting with One Life Healthcare, ONEM, and Global Blood, GBT. So we'll be keeping an eye out on any significant developments from those meetings. And now today I have a setup to share. So I'm looking to open a nimble bullish trade on UPS this morning. And I'm going to be putting a stop below support at 154. And the idea here is to hold the trade and then close it right before earnings. And here's my rationale. So looking at the latest checks from KeyBank, we can see that the latest UPS B2C online parcel channel checks is showing continued deceleration through Q4, as shown by the graphs that I shared, which I believe is a major reason why UPS stock has begun to stall in recent months. Now, we can sit here and argue that 51% year-over-year growth in December is still very high, but what the market really prioritizes is the second derivative. And right now, the second derivative is negative, which is likely why the stock stopped moving higher ever since Q3. And then looking ahead to 2021, that's obviously when tough comparisons will start to kick in. So the potential upside in the stock over the next year is no longer as attractive as it used to be. And so for those with longer term horizons, I think we'll be better off owning other stocks over the next 12 months compared to UPS. So to summarize, I'm no longer as bullish as I used to be back when we recorded that Jaguar media video on May 21st. Now, you might be wondering, if I'm no longer bullish, why on earth am I recommending to go long UPS today? So let's apply some game theory. Because the thing is, a lot of market participants are succumbing to the trap of linear extrapolation of price action these days. So right now, the stock is trading at support level and we are coming up to earnings. Now, I can imagine there's going to be a lot of people that are looking back at the price action of the last couple months, and out of pure inertia, they're hoping that there's going to be a continuation of the momentum buying that we saw back in Q2 and Q3. Therefore, I think they're going to be trying to get long going into earnings. Additionally, there's also the matter of Biden's unveiling of his economic stimulus plan this Thursday, which is likely to be substantial. And I think that's going to lead to a knee-jerk reaction from the market where the UPS bulls are going to assume that stimulus is going to lead to more e-commerce demand. So what I'm hoping to do by buying the stock as support here is to ride on the backs of these participants who are going to be bidding up the stock ahead of earnings. And then right before earnings, I'm planning to close out the trade and pass on the position to the next person, because I think the company is going to report further deceleration in their guidance, from which I anticipate the stock will have a negative reaction of sorts. So that's the trade I'm taking here, going long with a stop at 154 in case I'm wrong. Hopefully the stock gets to around 175 over the next couple of weeks, and then right before earnings, I'll be handing over the bag.
Interesting stuff, but I have to say though that in the context that we're going to see some growth deceleration naturally, the fourth quarter, despite being the holidays, isn't going to be as strong as what it was during the pandemic time when everybody was shut down and locked inside their homes during the month of March, April, May, June, and such. So you can see from these numbers. But in pure absolute terms, wouldn't you agree that 50% growth rate, this is just ridiculously exceptionally high, even in just pure absolute terms, in terms of history, going back any time last year, 2 years, 3 years, 4 years. I mean, and then on top, excuse me, my apologies. On top of it, this stock has been consolidating for the past 6 months or so. So there is a potential setup here, in my view, where the growth rate has been declining, but also the game of expectations. To going back to your game theory, I believe that the performance in the stock for the past 6 months with a flattish price action has pretty much rather baked that in. So unless we're going to see cascading deceleration from here, where the growth rate goes, quickly back to the 20s and the teens, perhaps this will still be seen quite positive when the company reports earnings that remarkable quarter. Just my high level view over here. Would you agree?
I would agree, but my concern here is not with the Q4, it's with the guidance, because if you look back at the chart, April is showing last year's April is showing 84% year over year. So I don't know how sharp that deceleration will be for Q1.
Got it. All right, folks, just wanted to highlight everybody that for those who missed, this was one of the best calls that Chronicles made. I have to say, not the best, despite the ridiculous run in stock. He has made some other remarkable calls in Jaguar media. But back on May 21st, right in the middle of pandemic, is when we produced this 17-minute video in United Parcel, UPS, calling for stock to make a massive run. And this was, you can see right here, with the stock trading around 93.94. And within 3 months later, this thing had nearly doubled, or up 80-90% at the time. So there was a lot of happy Jack coins during this period. And now for 6 months, it has been consolidating. All right, let's try Jay one more time if he's available. Jay, are you there?
Yeah, can you hear me?
Yep.
All right, so quickly today, looking at a company called Powerfleet, ticker is PWFL. This company was formed in October of 2019 when ID Systems acquired Pointer Telocation. Powerfleet is a global provider of wireless, IoT, and M2M machine-to-machine solutions for securing, controlling, tracking, and managing high-value enterprise assets such as industrial trucks, tractor trailers, shipping containers, cargo, vehicle fleets. If we go back to the last earnings call, management talked about a steady recovery that it was seeing and a growing pipeline of deals leading to confidence in 2021. Total revenue was up 7% sequentially, and some of the wins that the company highlighted were continued to roll out at Ryder System to embed telematics into its forklifts and other handling equipment. It extended and expanded its partnership with Jungheinrich, which is a German equipment company. It was selected by Day & Ross, a Canadian-based transportation company, to outfit a large portion of their trailer fleet. And then it provided the French Red Cross with a plug-and-play traceability solution used during shipment of healthcare equipment and supplies. Now, there were two items on the call that caught my attention. They talked about the rental car business. In Q3, one of their customers, Avis, they talked about the business was recovering and that they were currently at pre-COVID monthly billing levels. They then said, we are also continuing discussions with the largest rental car company, which I believe is Enterprise, on doing a large scale field trial of their product in 2021. Switching to the cold chain space, management said, our customers in the cold chain space have reported an increase in their business as they move essential food and pharmaceutical products. We're currently in 11 field trials with approximately 40% of those associated with refrigerated tracking. While these field trials represent a 30,000 unit near-term opportunity, these customers represent an additional 130,000 units in potential. So now Sunday night, Canaccord Genuity was out with a note. They raised their price target to $12, and the comment from that note that caught my attention was when they said, we note some of the large deals in its pipeline, such as with the rental car company and cold chain trials, are not currently in our model and would represent potential upside to our estimates in 2021 and beyond. And finally, the company is going to be presenting tomorrow at the Needham Growth Conference.
Powerful bull case there, Jay, and a name that I've never heard. This is a $273 million small cap that grew its revenues by 80% year over year during the first 9 months of 2020. Its trailing 12-month revenues are $119 million. So the stock only trades at about 2.5 times sales, which is rather very low. And when I read the company's description, that it provides the technologies to control, track, analyze, and optimize various assets like forklifts, cargo, trailer, and connected cars. This is all ties very, very closely into what happens in warehouses and manufacturing facilities and distribution centers, which are directly tied to the manufacturing PMIs and the services PMIs, both of which are trending higher. So as the economic activity improves, this business should do quite well. You may have something very interesting over here. I may actually jump into this myself. On a very strong chart, powerful chart, power candles back to back, high accumulation patterns. Good stuff. I like it. New 52-week high yesterday too, and trying to break out from bull flag. All right. Thank you everybody for joining. We're going to stop over here. We'll see you in the chat room shortly.